It is so simple to jump into trading using the RSI indicator without testing different settings or educating yourself on the proper interpretation of this indicator because of a desire to grab money quickly. As a result, the RSI has become one of the most widely misused indicators. Once understood and correctly applied, the RSI has the ability to indicate whether prices are trending, when a market is overbought or oversold, and the best price to enter or exit a trade. The Relative Strength Index is a momentum oscillator that measures the speed and change of a price movement. The RSI oscillates between 0 and 100 and is often used to measure overbought and oversold conditions in the market, to spot divergences, or it can be used to identify the general trend. Basically, the RSI is analyzing the total number of down periods versus the total number of up periods and plots the average on the RSI curve. There are many different techniques for using it, but it can be altered depending on your specific needs. An overlooked method of using the RSI is to use the trend lines directly on the oscillator itself, in much the same way that they are used on price charts. Trend lines are one of the most common and helpful tools in a trader's kit. They are used to show the price upwards, downwards, and sometimes sideways movement. Confirmed trend lines are drawn by connecting a cycle low or high with at least two other of the highest or the lowest points on a chart to create a line of best fit. Connecting rising swing lows of the RSI in an uptrend or lower swing highs in a downtrend, traders can find trading opportunities with strong risk to reward setups. Because the RSI measures the surge in closing prices, when RSI changes direction and either breaks above or below a trend line, a significant move in price can result. So we'll use the RSI indicator to show us if the prevailing trend has ended or a new trend is underway. We're not going to measure the overbought and oversold conditions or as a crossover system. We're going to take one step further and look for a break in momentum of the prevailing trend. What I mean by this is that we're going to look at the changes in price relative to the changes in the peak and the valley that the RSI indicator will generate. Trend lines placed on this oscillator provide an additional level of precision as well as an additional trade setup. Because the signals are leading rather than lagging, stops can be placed relatively close to the entry point. This allows for a good risk-to-reward trading opportunity. The RSI trendline approach works best on higher time frames, but it can be used on any time frame for day trading, for example. The rules of this technique are straightforward. We only need to connect the most recent RSI peaks or valleys with a trend line, and we search for a breakout of that trend line, which will warn us that the market has lost its steam and that the prevailing trend has lost its momentum. There is one more condition that needs to be satisfied in order to enter a trade. We need for the price to still be trading below its trend line, so we'll need the RSI trend line to be broken and the price to be trading below its trend line. This is the most important principle in order for the RSI trendline strategy to work, because it tells us there is also a divergence between momentum and price. Momentum always goes ahead of price, and that's the reason why this strategy can yield a great return. The breakout of an RSI trendline usually precedes the breakout of a trendline on the price chart, providing an advanced warning of a reversal. Therefore, recognizing the break of the RSI trendline can be an important and profitable indicator that the price direction is about to change. This is a leading signal. A leading signal appears before the new trend or reversal occurs. RSI in its nature is a lagging indicator. Lagging indicators only give signals after the price change is clearly forming a trend. The downside is that you'll be a little late in entering a position. Often, the biggest gains of a trend occur in the first few bars, so by using a lagging indicator, you could potentially miss out on much of the profit. That's why, when trading the RSI trendline breakouts, you'll get leading signals. Now, you're probably saying to yourself, Oh, so I'm going to get rich with leading indicators, since you'll be able to profit from a new trend right at the start. You're right, you would catch the entire trend every single time if the leading indicator was correct every single time. But it won't be. When you use leading indicators, you will experience a lot of fakeouts. That's why it's important to look closely at the price action. If you would take a trade every time you spot a RSI trendline breakout, you would soon find out that the outcome is not as expected. The RSI trendline has leading qualities, but after all, it's still an indicator. You need to analyze the price. You need to draw key support and resistance levels to identify the trend and take RSI trendlines in the direction of the main trend. Here is a common mistake. Many traders that implement the RSI trendline breakout approach use it as a reversal signal. They see an upward trend, they spot the RSI trendline breakout and go short. This could work, yes, but it's not the most consistent way of using it. I use it in a more conservative way. When I spot the same uptrend, I search for RSI signals that offer buy opportunities. I have zero interest in RSI signals indicating short trades. I go with the main trend. In this JBP USD chart, we noticed some RSI trendline breaks. The use of the trendline provided an additional visual confirmation that a trade opportunity is near. The use of a trendline breakout gave buy signals a few candles before the actual move. In this another chart, we can have a representation on how a short setup would look like. We have the price making lower lows and lower highs, so we are definitely in a downtrend. We added the main support and resistance levels. Then we identified the RSI trendline breakouts. In terms of stop loss levels, a common practice is to use the candle on which the RSI broke its trendline. So in the case of our short setup, our stop loss would be above this candle. In real-time trading, however, this isn't the best practice. That's why I rely on recent market swings. I aim to place my stop loss above an important swing. If you prefer a better visualization of the trend, add the long-term moving average and take trades in its main direction. Here are other examples of RSI trendline trades. Regarding the settings, or better said the period of the RSI. RSI, like many other oscillators, is defaulted to a 14 period setting. This means the indicator looks back 14 bars on whatever graph you may be viewing to create its reading. Even though 14 is the default period, that may not make it the best setting for your trading. Normally, short-term traders use a smaller period, such as a 9 period RSI, to replicate shorter term movements in the market. Longer term traders may opt for a higher period, such as a 21 period or even 50. Depending on your trading style, you can lower your RSI to increase sensitivity, or you could raise it to decrease sensitivity. Keep in mind that on lower time frames with lower RSI settings, you will get a lot of false signals because the indicator will have increased sensitivity. So maybe it's better to increase the value of the RSI if you want to backtest it on smaller time frames. If you want a smoother analysis with less noise, go on higher time frames. Here you could use a lower period on the RSI, which will offer more trendline opportunities. But you could also adopt a less sensitive approach by using a higher period RSI, like the 21 for example. The key is to backtest and find the best approach that works with your trading style. The RSI is a powerful tool that can offer a great assistance on when to buy and when to sell. Sometimes it can also predict the trend other indicators are too slow to acknowledge. An important tip is that you shouldn't chase the trades. Let them come to you. RSI is an indicator and just follows the price. You should be patient and wait for a clear breakout of its trend line. Maybe sometimes you should wait to see how the first candle acts after the breakout, and after that, take your trade. If you got any value from this and learned something new, leave us a like to show your support. Also, don't forget to subscribe and click the bell icon to stay in touch with new uploads. Until next time.